Hi everyone, hope you're all doing well. Today we're going to take a look at a few things. We're going to take a look at what happened with the Fed last night, and then we're going to talk about Mercado Libre because that had an interesting drop yesterday. And then we're going to talk about the title of the video, which is Adobe. What is going on with Adobe and their earnings last night? Absolutely incredible. So we'll get onto that. Before we do, apologies there was no video yesterday. I just looked at the stock market at like 2 or 3 o'clock and I went, there's not really anything to talk about, so I'm going to have the day off, and then on Thursday I'm sure we'll be talking about the Fed interest rate cuts and Adobe's earnings, and that worked out exactly that way. I did spend the day though dropping some exclusive content on the private group, which I looked at Moonpig after their earnings on Tuesday. I pointed it out to you guys on Mondays. It's a stock that is interesting to me, and with the earnings now out, I had a look and gave my thoughts on is it a time where I'm going to be buying Moonpig. So there's a video out there about that one. And I also dropped my US stock market portfolio review for December 2025, the last one of the year, and everything going really well. So you can see what I'm up and what I'm actually down on my personal portfolio right there. But let's get on to today's video. Let's start with the US Fed rate decision. So the Fed did end up lowering the interest rates after all that back and forth in the last few weeks. They did decide to cut the interest rates. The feeling is that going into 2026, there's only one cut currently planned going forward. We'll see what happens, obviously. We know J-Dog is going to be booted out. Well, maybe not booted out, but we'll see where the Fed do lie when there's a bit of a change up there. What was interesting is not actually... I felt like the media focused on the interest rate cuts a lot, and they didn't actually look at the economic projections from the Fed, which every other meeting we get the new Fed projections. So this was the newest one since September, and I thought there was so many interesting points in there that nobody really talks about. So if you look at the GDP growth for the US, if you look at September's projection to where we're at now, 2025, which obviously there's only a month left, so there's not going to be a crazy change, but it did have a little bit of a 0.1 tick up. Now the big thing is if you look at 2026, the Fed actually increased the GDP growth rate by over 20% in 2026. So previously it was 0.8 projected, and that changed to 2.3. So that's a very significant increase, and nobody talks about it. Like, I thought the media headlines was going to be the Federal Reserve projects up 20% more growth in the US economy. I was really surprised it wasn't even talked about. Now, as we know, the Fed and a lot of these projections, they end up being all over the place and they're never right. But I thought it was news worthy of a headline. And there was even an upgrade to 2027, 2028 as well. If you look at the unemployment rate, that stayed pretty much the same, which is good, not getting any worse. And if you look at the inflation rates, there was a decrease in 2025, so it's going to stay at the 2% range. And you can see here the September, the projection now for 2026, we were expected to go to 2.6%. They're now expecting the inflation to drop to 2.4% in 2026. Major drop in inflation, and I thought that was really interesting. I thought, I can't believe that the market isn't taking more, that the revenue, the GDP growth is expected to grow a lot more, and inflation is going to come down a lot less. That's what you want to hear, isn't it? I mean, like I said, you know, the chances of it actually happening, the Fed are all over the place with numbers, so don't believe it too much. But when it's the other direction and it's going down, the market like takes it a lot serious. So I don't know. I thought that was really interesting. What was also interesting was Mercado Libre yesterday. What a drop that had, down about 5% in yesterday's market, and for the last 5 days down 7%. And look at the highs from Mercado Libre. From its 52-week highs in May time, stock's down about 21%. And I say to you guys all the time, you get Mercado Libre on a 20% drop, that, in my opinion, is the opportunities to buy Mercado Libre. And it seemed to drop because of the deal they had. That they got a partnership with a robotics company that will help, obviously, the shipping and all the facilities they have. So probably positive, and yet the stock went down. I was trying to find if there was any other reason, and there was just the normal chat around that, oh, because the stock's down, nobody likes the stock now, and everyone said, oh, it's because profitability slowed down. As you guys know, if you're on the Patreon, you know, we covered Mercado Libre's earnings, and what they're currently doing at the moment is they're going through an investment phase where they're cutting a few things that will hit the profitability, but in the longer term, that's going to get people using the Mercado Libre platform more and more, and you have the success further down the line. It's exactly what Amazon did. And as we know, the market goes short term all the time. It only thinks like the stock market used to be like short term thinking, but I would say like 12 months ahead. It seems like in the last like 2 or 3 years, we've switched to a stock market that literally thinks like 2 or 3 months ahead now instead of 12 months. And because it only thinks like 2 or 3 months ahead now, it's going, oh, the next couple of quarters are going to be terrible. Let's just sell the stock down. And if you're a long-term investor and you're realizing where Mercado Libre is going to be in 5-10 years' time, you're thinking, well, give me a 20% dip. I like that with Mercado Libre. I mean, look at the financials. They're expected to grow. I mean, the next quarter is expected to grow nearly 40%. But 2026, nearly 30% revenue growth. And for Mercado Libre, it's about 32 forward times earnings. And we know they historically beat quite a bit as well. I mean, the company growing at 30% a year at 32 forward times earnings that isn't even focusing on profitability yet. Incredible. So I like that one there massively. Let's go on to Adobe, because obviously this is the title of the video about Adobe. And really, I hadn't updated it actually since this morning. Let me just update where Adobe is on the stock price. It was down in pre-market, but I don't know where it ended up opening up today. Typical. Always when I'm recording a video, the internet decides to die. So it's actually gone green slightly. It was up 4% when the earnings came out, and then it went negative, but as the day has gone on, it has slightly pushed into the green. Absolutely incredible. I can't believe that Adobe is only up 0.5%. Like, imagine growing your revenue at 10%. What was EPS up? Like 14%. And your stock's basically the same. And even like year to date, when you look at the stock year to date and the performance it had, I can't believe like it's down year to date. My internet typically it has died when I'm recording this video. But even year to date, the stock's down 21% year to date. Like, imagine the levels of profitability and revenue this is grown at, and it's down 21% year to date. And last year down 37%. From its 52-week highs in 2024, stock's down 43% for one of the best companies in the world. Absolutely incredible. And I'm looking at the earnings last night. So EPS beat, which is good. Revenue of 10% beat as well there. You can see there originally when this came out, it was up 4%. And then they went on and hiked up the guidance. So they did another triple beat. So I've had this stock now for 3 earnings. And in that time frame, the stock's brought out 3 triple beats. And the stock is just trading sideways. Absolutely incredible. And I know a few people getting frustrated about this. Like, oh, what's going on with Adobe? Like, they've brought out these earnings and the stock's not going anywhere. It just goes down. Guys, this is where you take advantage of it. This is one of those where in the stock, this is the great thing about stock market. This is why you're able to create wealth in great companies, is that the market is so stupid sometimes. It will do stupid moves where they don't make sense, and you will get opportunities to buy stocks at great value that shouldn't be there. It's the only thing. You don't get it you don't get it when you're buying a car. You never go into a car dealership and the car will be absolutely amazing, and for some reason the dealership goes, oh, we just don't like Fords at the moment, so we're going to sell that car, that Ford Focus, and take this price off by 40%. It doesn't happen. You go buy a house, and you're buying a house in London, and the next day, all of a sudden, that house is now 40% cheaper in London. Like, well, why is it 40% cheaper? Well, London's finished down 40%. It doesn't happen. But in the stock market, you can have great companies that are financially, nothing's changed with them, and yet the market will throw it down 40% and you get the opportunity to buy it. That's why you get, the ability to make so much money in the stock market, is because the stock market will be emotional and it will sell stocks down that much, that quickly, just because you don't like it anymore, even though there's nothing wrong with it. And that's where you buy the opportunities to, make money. Sometimes they always don't work out all the time. You might get one or two where something ends up does going wrong with the business that you can't foresee. But quite often you can buy the ones and they'll work out for you. I mean, look at Google at the start of the year. The stock market went, oh, we don't want Google. AI's finished that one. And look at where it's at right now. Look at AMD. Oh, why buy AMD? Just go buy Nvidia. And then everyone's seen the financials that AMD is starting to do. And like, oh, okay, maybe we should own AMD. It happens all the time. And right now with Adobe, even though they're doing incredible financials, the market just has this thing where it goes, I think the reason why is because AI is going to disrupt it. But as we hear from Adobe and as we see the financials, point out where the disruption is, because I don't see it. So yeah, really good earnings from Adobe. It does officially mean that Adobe has now fallen down to a 16 times PE, because that's it. Adobe's financial year 25 is finished. This is their Q4 earnings. So Adobe is now 16 times earnings. I can't remember Adobe being 16 times earnings. Like, Adobe should be a minimum of 20 times earnings. But realistically, Adobe is like a top dog in the stock market. I mean, the S&P is trading at 30 times earnings. So Adobe right now should be like 30 times earnings. But if the S&P is at 30 times earnings, I mean, we should be talking about Adobe. Is Adobe 35 times earnings? Because it's better than the market average company. I don't know. But it certainly isn't 16 times earnings. And obviously, as we know, Adobe is a profit beast. So they're just throwing money into share buybacks. So the beating EPS, the buying back shares like crazy. I mean, that EPS is going to increase, and that EP is going to drop even more. Even next year, I mean, we're 12 months away from Adobe coming 14 times earnings, which is incredible. Listen to the conference call. I'd be honest, there wasn't really much in there that shocked me or anything new into the conference call. A couple of things here is that they do believe that ARR, average recurring revenue, is still going to grow at double digits, which is amazing. So not really seeing much impact there. They also talked about Firefly a little bit. They said that they have now 2x quarter-over-quarter growth in first-time subscriptions of Firefly, which is obviously great growth there with what's going on with Firefly at the moment. They also said that they executed a record share repurchases totaling nearly 12 billion, reducing the shares outstanding by over 6% during the year. I mean, that's great, isn't it? 6% a year of the shares being reduced. That's what you want. When the stock is this price and you've got all that cash, buy and buy and buy the shares. And if they keep reducing it by 6% a year, your EPS and your P ratio is going to look very cheap. So as long as they keep doing that, that'd be absolutely amazing. I actually don't have some numbers up, but let me run some numbers for you guys about where we're at with Adobe. So looking at the numbers here, we've got 8, 9, 10% revenue growth. I have factored in a share buyback on the lower numbers. 20 times earnings, so I'm going a really low multiple here at the moment. And on the low side, we've got around about 46% upside, 62% if you include a share buyback. And on the real high side, you got 67 to 85%. Now, that's decent upside. That's probably going to match you around the S&P 500, maybe even beat the S&P 500. But I would be very disappointed if the market puts this to a 20 times earnings. I think the market should put Adobe to a premium. I think it's a premium company. It grows faster than the market. The profit margins that it has as well. And right now the S&P is 30 times earnings. So Adobe has to at least be 30 times earnings in my opinion. So if that's the case with Adobe, and we do go back up to like a 30 times earnings multiple, then the upside does really start coming in then. We do end up, let me just up that high side there. So on the low side then, we're around about 119% upside. And then we're talking about where it comes 151, or even if you add the share buyback in, 178% upside. So yeah, I really like that with Adobe. So I said to you guys, I want to see another earnings report from Adobe just to see that everything's going really well. In my opinion, everything is going really well. It does probably mean that I'm going to name Adobe as my number one stock for 2026. And that also puts Adobe in the camp of like, well, I'll let you guys know. I did, after the stock went down after their earnings yesterday, I did increase my position. That did put Adobe into my top 5 holdings. And if Adobe stays at these sort of levels going into 2026, I will continue to add, and Adobe will push up to a top 3 holding. And if they keep doing these financials as they are doing, and it stays at these sort of share price, Adobe will push up into a top 3, top 2, top number 1 holding. If it stays at these sort of levels at the back end of 2026 while still financially performing amazing, you give me Adobe at 14 forward times earnings. I'll take it and I'll add. So yeah, really happy there overall. And hopefully the market quiets down a little bit for Christmas now anyway. So that's my thoughts on everything, guys. Hope you enjoyed it. See you in a bit.